the whole world is talking about energy consumption, and also all the countries on the planet except Germany are talking about nuclear power plants. But only the insiders are talking about uranium stocks, the bottom of what we need when it comes up to the supply chain. And here lies real potential for the future. And today with me is Roger Lemaitre. He is CEO of a company called Homeland Uranium, and I met you as an uranium insider. And today we will be talking about the uranium market itself. Where are we at? Where can we see potential in the future when it comes to uranium stocks? And we will also talk about your exciting project within the USA, which is, I think, a very good location to be in for a mining company right now in this uncertain times when it comes to geopolitics. First of all, Roger, thank you very much for your time. It's great having you on our show.
Oh, thank you very much for having me. I'm enjoying being here.
So let's start maybe a little bit on the macro perspective, right? Maybe you can give us an overview about the current, let's say, fundamental situation on the uranium market, the demand and supply. Also, where is the uranium currently coming from? And what do you think is the outlook for the next few years here?
Well, let's work backwards. And where is it coming from? And I think that's the fundamental question in the space right now. I don't really believe that we have a grip on where things are going to come from. We certainly see the world energy demand changing very rapidly, particularly in the Eastern or OECD countries, where I think if you went back 5-6 years, you would have seen probably growth in electricity demand being 2-3% per year for many, many years. And now we're seeing explosive growth in developed countries, all related to the AI race in part. Certainly is the accelerator going forward. We do see with the prices of uranium moving recently, a fair bit of movement on some of the old mines that have been shuttered or put in standby mode being brought out of the woodwork. But the reality is that those are drops in the bucket compared to what's needed. So we've seen at the last two COPEC conferences and such, 31 countries pledging to triple nuclear power generation by 2050. The U.S. talking about quadrupling capacity. We see China moving forward really quickly. Now, I'm not foolish enough to believe that those targets are going to be met. But even if the increase is 25% or 50% of what's being wished for, not 300% in some of these countries, that's going to create tremendous amount of demand going forward. And I just don't believe there's the capacity sitting there right now to make it happen. We do know, for example, the top 10 producers produce 80% of the world's demand. We know that a lot of, supply, not demand. We see demand already being underfed during the last between the last cycle and this cycle by underfeeding, which has now disappearing rapidly, which takes one major mine off the market essentially, which is the equivalent of a McArthur River or Cigar Lake or two of the Kazakh mines. And yet we're seeing growth and there's nothing to feed it. We see what you see with things that are happening in Australia and Namibia. And even what we're going to see coming out of Canada here will replace one of those mines that come due. So it's not even a growth story. It's a barely, maybe even if we're lucky, to replenish the existing demand, not what future demand is going to be. So where that uranium is going to come from, I don't know, because there are not enough projects sitting out there to feed that demand, certainly at today's prices.
Well, that's a clear statement, and that may be also an opportunity from investors. But let's have a look at the uranium spot price, right? We have seen in the years of 2021, 22, the tremendous upwards trend in the spot price. Now it has come down again. We reached even above $100 on the spot level. But now we see the spot price coming down, but we had very good month behind us with a very good month for junior miners. So that tells me that there is a difference in investing in uranium stocks compared to investing into gold stocks, right? Because you would never see the gold stocks going up when the gold price has been falling over a couple of weeks. So give investors a little bit of an idea how the uranium investment market works. Maybe one, A, on the spot price side, and B, what really is a trigger for the mining industry and especially the juniors?
Yeah. Well, certainly gold and uranium work very differently because uranium, while there are stockpiles, it's an industrial metal essentially for energy, and it does get consumed. Whereas gold, you can always see different sources of gold coming into the market, whether it's central banks, et cetera. So you don't really have that game in the uranium sector. It's substantially smaller, orders of magnitude smaller in terms of its market size, probably 3 orders of magnitude smaller. And the challenge for investors in the space is that you can see one piece of the puzzle when you see the spot price. And when I look back over the last sort of 14 months of the spot price activity, we saw it spike up to the $100, like you said, and come right back down. And I actually break that down into two parts. There's the parts before January and the part after January. The part before January, you see the spot price moving based upon fundamentals in the market, people talking about growing capacity, and the SMR craze and AI trying to generate that. And that's a whole other story I'd like to come back to at the end of the day. And being up in a market that's in backwardation. And when uranium markets are in backwardation, there are sort of four key players in this market. Utilities, of course, being the most important because they're the ones that ultimately consume. But they don't play the spot market very much. They play the term market. You have your speculators and you have your producers who go into the spot market to basically buy and use their arbitrage value between buying spot pounds and turning them into term pounds. And historically, that spread between spot and term is $7 to $12 US. So when the market goes in backwardation, your investors don't play the game. Your mid-carry, you can't borrow uranium on a mid-carry trade contract. And only your utilities are in the market, but then they're going, well, why would I buy $100 pound when I could buy $60 term pounds, or can you buy $60 term pounds? So the market goes into sort of let's wait and see where things stable out at. Since January, we've seen with tariffs, we've seen utilities go, oh my goodness, what do we do? Can we buy Russian supply when it comes to enrichment or conversion or products? Can we not? Are there going to be tariffs on this country or that country? And so the utilities sit there and go, okay, we're looking at a 10-year plus window. I'm not going to commit myself today. And they generally work on it's a 3-year process to take a barrel of yellow cake and turn it into fuel pellets to go into your reactor. So while they all said they have 3 years worth of inventory, well, it's a working inventory for the most part. I mean, yes, there's some strategic pounds sitting there here and there. So what we've seen is almost an entire year of that complete cycle abandoned. Meanwhile, so they're going to have to make that up. Meanwhile, when you look back, for investors, you see spot price, but now when the spot prices come down, the term prices come back up, and it's still, it's slowly rising. So the term price is the key for what utilities buy, which every pound will eventually go to utilities, with the exception of Sprott and Yellowcake PLC, which are holding. But when you look at the way utilities procure, they don't buy uranium. They go, I got to buy conversion. Now I got to buy enrichment. I got to buy fuel manufacturing. They work backwards. And so when you look at spot enrichment prices, they're at all-time highs. They haven't come back. And when you look at spot conversion prices, they're at all-time highs and they haven't dropped back like the spot price has. The term price hasn't dropped back either. And those are all leading indicators that tell you that utilities are actively trying to procure uranium today. So the spot price will follow as things continue to tighten up.
Okay, that's very interesting. Thank you for giving us a little bit more insights on the market here. Let's talk a little bit about your company. Maybe let's say we build a bridge there, because the US government has ambitious goals to, as you outlined already, quadruple nuclear power generation within the next few years, right? And you are an US-focused exploration company. And to be honest, Roger, we are also investors, and we and our German investor community, we had a very good success in the past few months when it comes to rare earth projects within the USA, because we saw there is a gap, right? The US is dependent on China. They want to be independent. So there was a rush on these rare earth elements. How do you see your benefit on being an US-based explorer for these very, very important uranium metals for your company in the future?
Well, when we looked into when we bought this new uranium company, where we wanted to be, one of the things that I wanted to be was exposed to the United States, a country that produces less than 2% of their demand, which is really, and 50% of their imports come from Russia, Kazakhstan, and Uzbekistan and Niger. So countries that have some challenges right now with the US, and not so much Kazakhstan. Kazakhstan is more about whether they can actually move stuff westward versus moving it eastward. And the Kazakhs have pretty much signaled that everything's going to go to China from now on, going forward. So that market is a little bit tight. We see, what's really accelerating things is the AI race with the East versus West, and then in the U.S. wanting to make sure they move forward. We've seen them, the president decide that they're going to accelerate with 4 executive orders, accelerate SMR demand, accelerate new reactor types, but they haven't worked their way back down the chain yet. So we see, basically, if you can build a uranium mine in the United States that's profitable in the low cost half of the curve, there's going to be demand for your product because there's an absolute need for it. Even if there's not significant growth in the United States in the next little while, the way the world is regionalizing again and where things can get, there's a real supply shortfall coming in the US. So yeah, we just thought that was really important. We certainly see the regulatory environment changing very quickly in terms of moving things forward. Whether that's sustainable or not, I don't know. It doesn't so much help us today as it might help us tomorrow with our company sitting on a open pit, what we think will be an open pitable, substantial, one of the largest resources in the United States. And we really put you in a good spot to be able to feed a market in the long term. So I think that's what we're really looking for, is move this historical resource at 35 million pounds into today's standards, and then look at whether we can feed the current market in the United States.
That's very interesting. And my next question is maybe a little bit of speculation, so I'm not sure if you can comment on that. But we have seen that in the rare earth space, that we have seen Apple buying into MP Materials. We have also seen the Ministry of Defense buying into or funding actually projects. Do you see this kind of involvement in the future also in the uranium space in the US?
I believe so, particularly for those companies. I think in the past it would always be energy companies and such work and utilities working their way down the chain. But I think now that you're seeing big tech involved in utilities, and we've seen it with Apple going into battery metals and such, and working their way down the chain, I can foresee that happening to spur work on their part. I certainly see utilities working that way because it's very, I think it will depend on geopolitics to a certain degree, whether or not you'll be allowed to bring in certain foreign sources of uranium products. But even still, some of it's going to be economic as well. Like I said, I don't believe Kazakh pounds are going to come to the West 10 years from now. They're going to be going solely to the East, and that's partly a transportation issue. There's just I think there's going to be a secure supply concern, and I think you can see backward integration back down the chain. Certainly for those utilities in the US that are now really excited about, I think what they should be really excited about, getting guaranteed type contracts for the rather old utility reactors they have going now, or not with the new reactors that they want to build. I just don't see them leaving it to chance.
Okay, very interesting. Thanks. So let's talk about the company a little bit more, right? You have a historical resource base of over 35 million pounds of uranium. And according to your company presentation, there is a valuation below 90 cents per historical pound, which seems to be a very attractive level, right? Can you comment on that? What are you expecting in terms of the historical resource? Do you think you can confirm that? Can you even expand this? Give us a little bit of an idea of the company and your vision of the project.
Yeah, absolutely. I think our vision of this company is, while we're an explorer today, a year to a year and a half from now, we're going to be more considered a developer. And what I mean by that is this resource that we bought, when it first came to me as an opportunity, I thought, there's no way this can be true. I'm very familiar, been in this space for a long time. I know a little bit about the US space as well, global space for sure. I would have heard of this. I didn't ever heard of this project before. And we did the research, there it is. What Western mining has left the next company that comes along, which is us, is a roadmap to move this thing forward. They've They've drilled some holes. Most of them hit, of the 24 holes, 21 hit mineralization. The mineralization is down to 215 feet, so 75 meters vertical depth. And they've shown us, we have maps of where they are. So we can't convert that material because the data is just not there today. We'll have to go out and re-drill some of this stuff. But they said, here's where you need to drill, basically. Now it's just a question of going out and drilling and confirming what they've seen. So I think it's a relatively lower risk exploration project versus going out, say, to the Athabasca Basin and saying, I got a conductor on a trend, let's drill a hole. There's mineralization here. How much is here? And can we convert it into a mineable resource? Being less than 75 meters vertical depth in 4 horizons that are stacked on top of each other, there's a real chance to do an open pit mine. And I think our vision would be an open pit mine where we can actually heap leach extract this uranium and become a 10 plus year long producer over the long range. And that alone will give you opportunities that maybe some of our peer companies might not have. Because it's a single deposit, not multiple deposits in multiple jurisdictions, which require multiple permits and multiple sets of capital expenditures, et cetera. We've become a pretty long-term, a decently long-term supplier in the United States.
Okay, that's very cool. And you also already said that you have to drill to confirm the historical results. Obviously, your upcoming phase 2 drilling program is scheduled to begin quite soon, actually in the 4th quarter of this year. What are the objectives, or what do you think you can achieve within this drill campaign? What is your goal? Do you want to really have the first compliant resource, basically, or do you want to expand what's there? Give us a little bit of an idea of the news flow that we can expect in the next few months.
So I think the number one goal, of course, will be show if it's there like they think it is. And, we have a lot of confidence that'll be the case. Our phase 1 program showed us that where Western Mining found anomalous uranium, we found anomalous radioactivity where the horizons are where they said they are. So, and that's just the quality of work that they did back then. In this case, it'll be show us it's there and put together an inferred resource on our first, by the end of the 1st quarter of next year. And that along with that, we'll do some metallurgical work. First of maybe 5 steps that will give us the opportunity to say, can we look at heap leaching as a way of reducing overall costs? Because we want to stay in that low cost half of the curve, because that makes you're going to be around no matter what. You're not a swing producer. If all those things work like we expect them to, then the second phase next year will be about converting that from an inferred resource to an indicated resource, so we can look at things like engineering studies. So yes, that is our goal. We're looking at about, our first phase program is 50 to 70 holes at the sort of 30,000 foot, 10,000 meter level, or in terms of total production, which should be able to do easily here starting in late, mid-September or so to the end of the 4th quarter. We'll see results starting from that drill program on an every 2nd week basis. We can do downhole probing and get in situ grades, which will happen in real time while we're drilling the holes. And then we'll follow it up with assays, of course, as we go forward. So I expect that we see from October to the end of the year, fairly regular, every 2nd week kind of results-driven programs.
That sounds good. Sounds good. Sounds like good news flow ahead. And Roger, my last question to you. We already had a good interview, I think. What is your 3 main reasons why should someone invest into your company right now?
Well, if you look at our peer companies in the U.S., if you like U.S. uranium, even if you like uranium elsewhere in the world, we're a fairly low risk opportunity because we're not hoping to find something. We're hoping to define something that we already know is there. 2, when you look at our peer companies, particularly in the United States, they may have a similar number of pounds in their portfolio. They're historic like ours for the most part, but they're in multiple deposits in multiple jurisdictions, and they're not necessarily open pittable. So they're going to be higher costs for them to get those pounds to market because they got to permit multiple mines. We don't have to permit 1. And 3, for investors, most importantly, is that if you look at our market cap per pound or EV per pound, whatever metric you want to use, we're substantially cheaper than our peer companies. And we're hoping that when we do this work, the market's going to realize the quality of the asset we have and re-rate this company. But our peer companies are rated 2 to 4 times or where we're sitting today on a per pound basis. Market cap per pound, EV per pound, whatever you want to, however metric you want to use.
Very good. Roger, thank you very much for giving us all the insight in the uranium market, for giving us an idea about what Homeland Uranium is about, to give us also an idea about the upcoming news flow. Thank you very much for this good interview, and we talk again soon. Good luck with your exploration program.
Thank you, Jan. I look forward to talking to you again.
Very good.